And it's time to get into some of the numbers that have come through to the markets today. Italtile's first half headline earnings per share increased 13% to 24 cents as product demand increased. Revenue from group-owned stores grew 14% to 1 billion rand. And joining us now on the line to chat about this further is Peter Swatton. He's CFO of Italtile. Peter, thanks so much for joining us this afternoon. Let's get straight into things on a headline basis. Things certainly not looking too bad here. As I said, a 13% increase in headline earnings per share. Your overview of the first half.
Absolutely. I mean, we're not dissatisfied with the result. I think it's pretty much in line with what we expected. But certainly interesting trading conditions.
Peter, Lindsay in Cape Town, now you sound frustrated. I'm going to read a paragraph that's attributed to you from your results this morning. It says, the group has delivered creditable results in an industry which experienced a persistent lack of private and public sector investment borne out by the paucity, you say, of new build activity. That's frustration to me.
Well, absolutely. It would be interesting if we saw a little bit more capital expenditure coming into that sector. I think it will certainly assist us and certainly many other people. But one has to play the cards one is dealt.
Okay, so let's take a look at how exactly you're playing the game right now within a competitive environment that has certainly, as you've highlighted in your statement, challenged retailers to a new level of innovation.
Well, absolutely. I think as consumer spend starts to become under a little bit of pressure to retain one's market share and even to grow that market share, one has to innovate one's retail offering. And I think that's perhaps the challenge faced by most retailers.
So how are you catering to that demand down the line then?
Well, I think down the line one has to try and reposition oneself, which we've been doing for a number of years, away from a commodity-based product into something which is more fashion-orientated. And I think that's the space in which we play, and I think that's probably the strength that we have as an organisation.
Let's talk about the consumer in general, if we can, Peter. You talk about consumer spending slowing down appreciably, but are there different stories within that story? In other words, are there different sectors of the community, the South African community, doing better or spending more than others, for example?
Well, absolutely. I mean, we trade across the broad spectrum of South African society through three brands. Obviously, the top end, you've got the Italtile, which is targets your premium spend, and that's has done very well for us in the last 6 months. But our broad-based offering comes out of the CTM side, and particularly into the rural areas. And certainly I think the consumer's desire to acquire our product or shopping is certainly influenced by two factors, in my opinion. Certainly the spectre of unemployment looms large, and I think to a large degree one's starting to see the drying up of unsecured credit that's given some buoyancy to the market.
Mm-hmm. How's your story translating when it comes to the rest of Africa, Peter? Because you've certainly been in that territory for a while now.
We have. We've taken the view that we would like to trade in sub-Saharan Africa up until East Africa. We've always viewed it as an extension of the domestic market. We've opened a store in Nairobi in Kenya, and we've always taken the view that we will expand, but we'll do it responsibly. We want to make a good profit, and we want to have a sustainable business in each territory. But the offering,
if you look at your prospect statement, it seems to me. Sorry, Peter. Looking at your prospect statement, it seems to me that expansion into the rest of Africa might actually be necessary, because you talk about strong indications that consumers will continue to be pressured by constrained disposable income and will prioritise essential spending over discretionary spending, and you've sort of alluded to that already. So again, Alicia's asked you about the rest of Africa. Is that going to become a focus for you as South Africa slows down and is perceived to slow down even further?
Well, I think the message we want to get across is perhaps the happy days of 3 years or 2 years ago, I think we won't see for the coming 12 to 18 months. We're positive that we'll continue to grow the organisation within South Africa, but we're always looking for new opportunities. I mean, the bulk of our business does come from South Africa and some of the neighbouring territories. But certainly expansion will be there, but it's not going to be a mass rollout plan. We will take a medium to long-term view of those opportunities.